Toothpaste, chewing gum, and clothing. Am I just saying random words, or do these things have something in common? Watch to find out. So obviously, these are not random words with the common denominator being oil. So of course, oil is very important to the world above and beyond transportation, and it's a very attractive trading instrument to a lot of traders out there because of its volatile nature. But stick around, as the next few minutes could be more precious than black gold, because I'm here to explain why trading oil can fuel up your strategy. Let's get straight to the point. Oil has been the world's most important source of energy since the mid-50s. Its products underpin modern society, mainly supplying energy to power industries, heating homes, and providing fuels for vehicles and planes to carry out goods and people across the world. So without oil, many of our everyday products may not exist. So next time you use your toothpaste, solar panels, rugs, lipsticks, dentures, toiletries and plastics, just think of oil. Ever heard of OPEC? I write this all the time in my daily market updates, but for those who are not familiar, this is it. OPEC, established in the 60s, stands for Organization of Petroleum Exporting Countries. In a nutshell, they control the supply of oil in an effort to set the price of oil in the global markets, with a goal of preventing wild movements that could impact economies that produce and also consume oil. Countries that belong to OPEC are the founding five, including Iran, Iraq, Kuwait, Saudi Arabia, and Venezuela, plus Algeria, Angola, Congo, Guinea, Gabon, Libya, Nigeria, and the United Arab Emirates. Were you listening? How many countries did I list? Now, the other term I often use is OPEC Plus. So this is a group of 24 oil-producing nations, including OPEC, which I just discussed, plus 10 other non-OPEC members, including Russia. Oil prices remain influenced by supply and demand like any other thing. Supply factors that impact oil prices are OPEC. They come together to regulate the price of oil by controlling supply. Other countries that are non-OPEC, like the USA, Canada, and China, these are the world's biggest oil-producing countries, with their policies impacting the global oil markets. And finally, natural disasters or external shocks, events that economics cannot explain or control, such as natural disasters, war, and geopolitical instability, can all impact the price of oil. These were supply factors. Now let's talk about demand factors that impact oil prices. First one is global economic performance. The main drivers of the demand market for oil are the USA, Europe, and China. Number two, alternative energy sources. Let's not kid ourselves, people are becoming more environmentally conscious, and increased awareness of the benefits of renewable energy sources such as solar and wind could see a decline in the world's reliance on oil. Electric cars are also responsible, as are pledges by various governments to ban the production of new petrol and diesel cars in the years ahead. And finally, the strength of the US dollar. Oil is exchanged in US dollars. This means the value of the dollar has a major impact on the price of oil. If the dollar becomes stronger, for instance, the price of oil will tend to drop, at least nominally, assuming that all factors remain constant. But you know what, guys? It's not only supply and demand factors that affect oil prices. Traders like you and me who speculate about the future events could impact oil prices also. For example, remember the travel restrictions across the globe? Well, this caused oil prices to tumble as traders speculated a fall in demand for fuel due to a reduction and almost no need for travel. The primary benchmarks for oil are Brent and West Texas Intermediate, WTI. These are the benchmarks you will see when trading oil. Brent oil is drilled from below the North Sea. It is popularly refined into diesel fuel and gasoline. In trading, Brent is one of the benchmarks for oil in the wider market, such as the Middle East, Europe, and Africa. WTI, which is known as West Texas Intermediate oil, is processed in the United States. It's commonly used for gasoline and refining the trading world. WTI is a primary benchmark for the US oil market. Have you ever wondered why the price of oil on the charts is different from what you see at petrol stations? Although what you see at the pump may be influenced by global oil prices, there are a couple of additional costs that result in the charge. These are fuel duty, cost of petrol, and VAT, which differ from country to country. For that reason, in some countries, petrol may be significantly more expensive than in others, especially those who have fuel subsidies. So now you have all this information about all the outside of the charts. Let's go inside of the charts. Trading oil with FXTM is as straightforward as trading any other instrument. All you need is a funded account where commodities are available, MT4, MT5, and a reliable strategy full of diverse assets. In a nutshell, oil is the most important commodity in the world. It is our primary source of fuel and used in everyday products. OPEC regulate the price of oil by controlling supply, but can also be impacted by non-OPEC like the USA, Canada, and China. Oil remains influenced by supply and demand and comes in two primary benchmarks, WTI and Brent. If you have not traded oil before, I hope the insight offered in this video has shown you why it could be an interesting market. Remember, oil prices ended 2021 over 50% higher, so imagine how the global commodity may perform this year. Well, what are you waiting for? Do you have oil in your portfolio? If not, why? Also, what other commodities do you have on your radar? Please be sure to like this video and subscribe to our YouTube channel for all things markets. Until next time, thank you.